Shall I start, Venu, sir?
Yes,
Hello?
ma'am.
Yeah,
Yes, ma'am.
I'm audible, no? Yeah, okay.
Yeah, very much.
And screen is visible, right?
Yeah.
Okay. Very good morning to one and all. And like we started during the previous session, discussing about the GST specific issues to the hospital sector. I had already run you through the various, issues and activity aspects of what we would be dwelling with. Just in a quick 5 minutes, I will just give a very quick brush up and then we will move on. So the five segments we would be covering today is the various hospital-related services of this multi-specialty, cares and centers. Then the one case study I picked up for a collaboration arrangement. Then the research division activities, medical college activities, and call center services. So these are the broad categories. I will run through the respective issues as we move on to the specific part of it. Now, just a quick review about the entity per se. It is a education society, which is a Section 25 company registered under Section 12AA, and it has obtained a single GST registration at the entity level. Now, these are entry numbers 31 and 31A of the rate notification 11 bar 2017, which covers the human healthcare services. Primarily, it is subject to tax at 18% rate, subject to the exemption available. We also have this 31A, where other than ICU, CCU, these special category rooms, where any other room, the charges exceeding 5,000 per day to a person receiving healthcare services would be 5% without ITC rate. Now, this is the exemption entry which is available. Entry number 74 of 12 bar 2017, which states that healthcare services by a clinical establishment, an authorized medical practitioner, or paramedics. So these are the only three categories of service providers who provide this healthcare services are exempt under this entry. And again, the same corresponding entry of taxability of exceeding 5,000, which we found in 11 bar 2017. Similar entry to grant exemption, I mean, to avoid that exemption or the remove that exemption, a proviso is there for this entry. And again, we have the services provided by through ambulance for the transportation of the patient. Now, there are two definitions which I would like to take you through. These definitions are found in the notification 11 bar 2017 as well as 12 bar 2017. Both places we have these definitions. Again, to be something called as a clinical establishments, we have this Registration and Regulation of Clinical Establishments Act 2010, where this establishment should be registered under that law. And there are quite a few specifications and criteria to be met to be falling under this category of the institution or the entity. Only for such establishments this permission or this registration would be available, and it is important to satisfy this requirement to get to be eligible for that exemption what we discussed in entry 74 now. So it means a hospital, nursing home, clinic, sanatorium, or any other institution by whatever name called that offers services or facilities requiring diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines in India. So it could be any recognized system of medicine like we have the allopathy, Ayurvedic, homeopathy. So any recognized Unani, all those recognized systems of medicine in India are permissible, or a place established as an independent entity or a part of an establishment to carry out diagnostic or investigative services of the diseases. If it has a branch or there is an independent entity which is established out of it, that also gets covered here. And since the entry also covers the human healthcare services of authorized medical practitioner, So to be called as an authorized medical practitioner, he must be registered with any of the councils of the recognized systems of medicine established or recognized by law in India, and includes a medical professional having the requisite qualification to practice in any recognized systems of medicines in India. Even BDA qualified dentist, MBBS, and whoever is qualified to practice as an independent medical practitioner would also get covered here. Now, as far as this clinical establishment is concerned, there are certain criteria as to how it qualifies as a clinical establishment. There are categories, hospital level 1, level 1A, 1B, level 2, level 3, and level 4, like, the general medicine, specialist medical services, non-teaching super specialty, and teaching. Likewise, there are certain categories of the clinical establishment, and to qualify under each of these categories, there are specific infrastructure, amenities, the human resources. All these are specified, and the support services that should be there. Like, for example, having the operation theater, specific things would be required. One second. Yeah. So, I also briefly touch upon this charitable activities per se, because there is this the in the case study what we're discussing, it is stated that it is a 12AA entity. Of course, it covers only limited activities which by and large do not fall under any of our any of the institutions what we're discussing in our case study. Again, we have the charitable activities, meaning with respect to educational program. Again, this also do not have much relevance for the case study in our hand. So, sorry. Yeah. So I'm going to dwell upon the various issues. I've identified around 12 issues in the hospital sector, and then we will take upon the other activities associated to the hospital sector. Okay. About the institution which it is undertaking, like I discussed in the initial phase. So firstly, we already dwelt upon, but then I have brought out some samples for more practical perspective of it, so that we can deliberate uh, further on this matter. So issue number one is, whenever this inpatient billing happens, they give a various list of services and also the items which have been used for the inpatient services, out of which it will include, let's say the medicines, a part of it, some surgical implements, implants, all these things might have the MRP tag on it, and while billing, the hospital would have done an MRP based billing. We discussed this aspect during our previous session. And so we concluded that because an MRP is charged, which is inclusive of taxes, for an exempt supply, one is not supposed to charge taxes. This will tend amount to a possibility of a notice being issued under Section 76. That is why an ideal way to do the billing of these transactions, billing of the items which suffer MRP would be, first reduce the tax portion from the MRP pricing and consolidate all the costs associated because of the cost increase owing to it being an exempt supply, to bring it straight, the purchase price, whatever whatever the tax GST has been paid on the purchases of such material could be pulled up, and cost could be recovered by naming it as a cost recovery kind of, some ledger name could be given or some heading could be given to recover this cost. So I've just taken one sample example of invoice of a hospital, where this is a cash invoice basically. It would generally include this room rent, the consultation services of the doctors involved or the other consultants, miscellaneous charges they will have, this ward, ICU, ER procedure, orthopedic, and then we have these medicines items and surgical items. Further, if we look at the breakup, like in the medicines and surgicals, the specific items, whatever have been, given, and how many quantum, all these things would be there. this would, by and large would be the MRP pricing, which the software would ideally fetch it, which includes the taxes. So probably systems has to be set through so that tax part would be reduced in the billing at the time of billing these products, and then as a markup at the end, it could be added per se. I've taken a second example of an insurance invoice where the hospital would provide the services to the patient, but amount would be received by the insurance company. Classic case, it could be a bill to ship to kind of a thing where billing would be to the insurance company and shipping of the services would be to the patient, basically. So I took up this example where I'm showing you as far as this laboratory related, billing is concerned. These are the various uh, heads under which there has been a billing per se. So I'm just trying to, deliberate upon here. If we contrast this with the medicines and the implants details per se, here, although even during the laboratory services, certain items or products are consumed, let's say some test tubes or some, storage units for samples, like the blood samples and urine samples, which are collected are stored. So there could be some, again, goods involved, which might again have MRP. However, since this nature of laboratory is more in the sense of services, for this there may not be a requirement for reducing the taxes from the MRP per se, because this is not a product, it is service, and the products are consumed as part of service. So that is how we distinguish between a medicine where item itself is built versus this laboratory, cardiology, and other procedure related services where it is more of a service for which it is charged than the goods part. So I mean, this is something I just thought we can look in over here. Anything to be discussed here? This we last time itself we concluded, we even took an example of how we can probably bill and optimize the money collection for the hospital and yet keep it safe from the notice under section 76. Anything else?
My only point here
Yeah.
is the invoice that you have shown, the first invoice that you have shown is typically the same invoice format for all the hospitals, whether it is
Correct.
Apollo or everyone. So
Yeah.
do you mean to say that currently whatever they are doing, it is wrong?
See, I mean, it is not like who is doing what, but if we analyze from the law per se, I mean, can you agree or can you put up your point as to how can one charge MRP, which includes tax, for an exempt supply? Because principal supply is an exempt supply, and because of which all the ancillary transactions are also becoming part of the composite supply, and the whole is treated as an exempt supply. But when individually itemized billing is done, taxes are included therein. 76 clearly falls over here, isn't it?
76 would appear only when I'm collecting something in the name of tax, is my view.
So, you have not bifurcated the tax here. I mean, again, we discussed about section 33 and 32, wherein once you collect something, you are obligated or you are under a responsibility to show the breakup of tax portion. You are not doing it doesn't mean there is no tax in it.
No, unless I say that I'm collecting tax, I'm collecting tax.
The point is, you're selling at MRP. MRP
Yes,
includes output tax. You cannot deny that you have not sold at MRP. So that's the only question.
No, I am not denying that I'm not sold at an MRP, sir. I'm only saying application of 76. So
No,
when I am...
If you have collected output tax, which you are not denying, on an exempt service, That's the only point you can consider that.
Okay, sir.
Yeah. So shall I move to the next issue?
No, but what is it? It is an exempt supply of healthcare service, and on your invoice, your invoice for medicines at MRP. What is your view on that? Are you collecting output tax or you are not collecting output tax? See, for 76 to attract, there are many ways. You can have an all-inclusive contract where it says it includes 18% GST, but turns out to be exempt, where you don't do price adjustment. You know, Amrit Agro and all those decisions. So, is the allegation reasonable or not? Hello?
Yes, sir. Yes, sir.
Is the allegation reasonable or not?
I am not still convinced, sir. I'm just thinking on it. So,
okay.
Since per se the supply is exempt, in case of a supply where it is taxable supply, then we can apply Rule 35 and say all-inclusive contract has been considered. So even the works contract where you are saying that we've given a whole composite, even there, I would still feel that if it is an exempt supply, it's an exempt. Like how Annapurna has given the example of laboratory, which also consumed medicines or things. And since it's a composite supply of services, so she says that we will not bifurcate. So,
see, the costs you have incurred,
yeah,
to provide a service is different from what you are charging for.
Even here, sir, the healthcare, like I have used implants as a part of the treatment.
Then you should not have given a breakup of those items.
Itself does not change the position. You have provided each of them individually and you're treating it as a composite supply of exempt services. When you look at it that way, it's not like the breakup of the invoice is the way to arrive at the contract price. The breakup is individual supplies applying the composite HSN code.
Sir, for laboratory, is the stand taken correct, sir? It is a service because there is no...
You have consumed, because there is no, what do you call, transfer here, because the consumables either are still with you in a used condition or you have destroyed them because it is used, but you have not passed it on to the patient.
And again, you know, generally in laboratory, it is all service based and it is by and large a fixed pricing. But whereas in the surgical items and stuff, it varies based on the case to case what is consumed independently, you know, sir. I mean, will that matter?
So you have to see how when the question will get answered if you say it is cost breakup. If you say it is cost breakup, it has one meaning. If you say it is individual supplies having a composite supply rate of tax, multiple supplies where you have applied a single rate of tax eventually, it means different. So that is the point you have to differentiate as to how you what is the nature of your contract.
Okay.
In the lab example, it is single supply with cost breakup. In the inpatient billing, it is multiple supplies, HSN based on composite supply.
Got it.
But we'll continue.
Yes. Yeah, I'll move on to the next issue. with respect to inpatient consumption of pharma products or these implements, where of course basically it's only the pharma part where it is also sold to outpatients as well as consumed for inpatients. So how do we apply this rule 42 is one of the aspects what we thought of discussing. So last time I had shared, and I would just like to quickly give a brief of three possible ways to look at it. So whenever there is this purchase of medicines happen at the pharmacy, so at the time of purchase, one does not know whether it will be consumed for inpatient services or it will be sold to the outpatient. So definitely this cannot be taken as a common credit, which is C2 for a proportionate reversal. That is my view. So alternatively, two approaches could be thought about, where we treat everything as taxable at the inception and avail everything, which also falls in line with the new reporting of 3B, and then reverse as and when inpatient supplies happen, so that the T4 credit gets transformed into T2 credit at the time it is consumed by the inpatient supplies, and thereby we reverse it as and when this happen. The second approach is treat everything as towards exempt, reverse it and reclaim only to the extent of the counter sales at the OPD. So these are the two approaches we thought. Again, reverse and reclaim, since we have a limited operation of law as far as the clarity of reclaim is concerned, one being the proviso 216(2), where the creditors aging related thing. The other one being the supplier has not paid tax even after declaring in 2A, but later on in subsequently he has paid tax at that time. So we need to reverse and reclaim. So these are the two provisions in law where reversal and reclaim is expressly stated. So, but here, I mean, again, probably the ratio of sales could be the basis, or we have to assume one of the things and proceed further. Otherwise, treating it entirely as a common credit might not be a appropriate way, is what my thoughts are as far as this application of Rule 42 is concerned. Any thoughts on this? Anything to deliberate on this? We had discussed this during the last session also. Jatin sir, your views on this? Sir?
No, nothing. You can continue. It's just a reversal approach.
What would be an ideal approach, sir?
It's supposed to claim everything, isn't it?
Yeah. So approach one is fine, sir.
I think so, yeah.
So we'll move on to the next issue. Room rent exceeding 5,000. I mean, this entry in 31A. So there are a couple of questions we need to address here. Is vivisection of room rent from composite supply of healthcare services correct, and whether it is subject to GST? And the words used is exceeding, I mean, the entry which says exceeding 5,000. In case the room rent is 6,500, is GST applicable on 1,500 or entire 6,500? So I've just taken examples of few entries where these thresholds have been discussed. All these entries find place only in 12/2017 with the threshold specification, and there is no corresponding threshold specification in 11/2017. So one example is of the Resident Welfare Association, where the words used is up to an amount of 7,500. We also have Circular 109, which has clarified that the moment it exceeds 7,500, the entire amount would be taxable, and it is not the delta per se. We have another entry 77A, if we compare and contrast here, of course, during one of the sessions, Jatin sir has shared this. There is a space in between up to in entry 77, while in some other cases like 77A or 9D, there is no space over here. Again, if we see entry number 7, where services provided by the government, with an aggregate turnover of up to. So again, here we find it as a space. So these are all a couple of entries for our, consideration as to how it is worded. I have few more examples, but if we look at 11/2017, it is only one entry which says service of membership organizations which are chargeable at 18%. There is no specification of any thresholds in 11/2017. Now, a few more examples is where the words used is does not exceed, less than, not more than. So, all this will lead to a situation where it is a binary answer, whether it exceeds or does not exceed. If it does not exceed, then there is exemption. If it exceeds, the whole of the thing will suffer a tax and not just the delta part. So interestingly, if you look at this entry, what we are considering now, it has place in 31A, entry number 31A of 11/2017, as well as entry 74 in 12/2017. Probably, maybe I'm not in a position or to explain or say why this has been worded so, but anyways, it was one thought. Probably, this is distinguishingly, this is one entry where the threshold is specified in both taxable as well as exempt notification. My conclusion on this issue is that the moment the room rent exceeds 5,000, in the example what it is taken 6,500, on the entire 6,500, 5% GST needs to be collected and discharged. And whether the vivisection of this room rent per se from the composite supply of services is correct or not, it is again the provision or the entry itself has to be questioned, which might be a substantial question of law which is involved. Of course, from our compliance perspective, definitely, people would be thinking about collecting and discharging it. Let's just hypothetically say that tomorrow this entry is questioned and it is said that it ought to have been, a part of the composite supply, and hence GST shouldn't have been collected or whatever. So, and the collected GST, a remote possibility that Section 76 could be invoked, and what has been already paid, if at all it is paid through ITC, then it could be demanded as a payment through cash. This is one possibility which I'm looking at. But otherwise, I think, because of the entry, both there is a specification in 11 as well as 12. I find that this entry is, valid, and levy of tax would be appropriate per se. Sir, your thoughts on this, sir?
No, you go ahead. I think a very reasonable interpretation.
Okay. Any other members want to share their thoughts on this, or shall we please? Sir, any specific reason, sir, the threshold has been specified in both the notifications, unlike other entries where it is only found in exempt notifications, sir?
No, because this is introduced as a very unpopular withdrawal of exemption. To make it very clear, they've inserted in both places what I said. But I don't think we can go into why did they draft this way, unless it's going to help us in the drafting.
Oh, okay. So this is the circular extract of 109 also. Again, the words used there is, does not exceed, sorry, I think it is up to 7,500 is what is used in the entry. The clarification given is, entire amount. Going to the next issue, the occupancy charges which the hospital collects from the nurses, staff, medical attendants, and also, it provides this accommodation or the rooms, whatever is there for the visiting doctors to, relax or for staying up over there. So the question is, as far as nurses, staff, and medical attendants are concerned, it will collect the some monthly rental, but for visiting doctors, it does not collect the same. Important question to address here is this activity falling under renting of residential dwelling, or it is merely accommodation services provided by the hospital under the residuary category, what we see in that entry? So, to my mind, to qualify as a residential dwelling, it should be more like a facility of a home where there is a kitchen, and it should be more like a home and not just a sleep and fresh up area. So generally what it is seen is, the canteen facilities are there, the staff would avail the food services from that place and all that. So to my mind, this looks to be more like an accommodation services and not the renting of the residential dwelling. Anyways, when it does not collect anything from the visiting office doctors, there might not be any implications unless that price has a impact considering this. But I don't think so, because it is more like a facility which is given to the doctors to rest and use them when they provide the services. Anything to be discussed on this? Any members want to share anything?
Nothing. Please proceed.
Yeah. So now the next question in the case study is that this is what we see from the hospital perspective. Now the trust which has provided this on lease to the hospital, again, there are residential quarters, and the entire building of the hospital is let out. And on the municipal records, it is shown as a commercial building. To my mind, again, it is the entire lease of the leasing charges or the rental charges, whatever the trust collects on the entire portion, GST would be applicable. Moving on to the next issue, canteen services. Now, the case study has discussed a couple of scenarios wherein employees or medical staff are given the canteen services at a very subsidized price of even 80% below cost. And as far as the consultants, below 20% below cost for the attendant consultants. Of course, patients and their attendants are charged in the patient's bill, inpatient's bill, what we saw, like, food and beverages or something like that. One category would be there where they would be charging the food related pricing, food related charges as well. Now, as far as this employees, medical staff are concerned, basically, if they fall within the explanation to section 15, where they get covered under the related party, then it would attract that, there is a supply to them, and at the open market value that has to be arrived at, and GST has to be discharged on the same, irrespective of the fact that only 20% or 80% is collected from them if they fit into that related party definition. So I would think that all these scenarios would fit in there, and hence the valuation to be arrived is the open market value, and GST has to be discharged on that. As far as patients and their attendants charges, which is included in the patient's billing, of course, we can treat this as an exempt supply, being part of the entire composite supply, including the attendants part. But there could be scenarios where attendants might go independently and buy it from the canteen, and they collect the GST separately therefrom. One more aspect to be looked into is there could be some Again, MRP based products here, it could be a water bottle or a juice or a biscuit packet or any of these items which is sold. Then again, the treatment, what we discussed earlier in issue number 1, has to be considered even for the canteen services per se. If at all it is billed as a itemized billing, which is obviously they would do the itemized billing for the specific products per se, unless it is a cooked item. Yeah. So moving on to the next issue, on-site patient services. Here is a sample where, home care physiotherapy, where the doctors or the paramedical staff would go to the respective places of the patients and give the physiotherapy treatment or the connected treatments at their respective homes. Now, is there an issue that will the exemption under entry number 74 will still be applicable? To my mind, the answer would be yes, it would be applicable, because it is the clinical establishment which is providing the services by employing these doctors or staff. And in the as far as this clinical establishment is concerned, there is no requirement that the services has to be provided within the very same premises. Of course, in the definition, there is that, in an independent place, or those wordings we saw in the definition. But yes, I think this could be extended even to the on-site patient services, wherein, even the blood samples which are collected by visiting the patient's places, physiotherapy and such other treatments. And, there could be one other service which the hospital is giving, wherein the, patients who are not capable of taking care of themselves. So a caretaker who are trained people from the from the hospital, part of the hospital, either as an employees or on the contract basis, they're employed, and they are sent across to the patient place to take care of them, and monthly billing or some frequent billing is done as far as the these healthcare and patient care services are concerned, at the place of the patient and not at the place of the clinical establishment. I'm of the view that if this entry is broad enough to cover even these services, provided it is provided by the clinical establishment itself. Any questions on this or any thoughts on this, or we next? Oh. Yeah. So the next issue is goods on approval. Many a times, whenever a surgery is performed, depending on the various tests done and the expert opinion given, the implants and which are to be used for the surgery and probably fitted into the body of the person are selected based on the suitability of each person. So practically, it might not be feasible for the hospital to have the entire variety of the things, or the various companies give it on approval basis, so that the moment the expert or the doctor prescribes a particular implant based on the various analysis which is done, that is taken upon, used in the operation, and then that gets billed. So anything to be looked at from the hospital perspective, I would think it is more to be seen from the supplier perspective, because we have a bar under section 31(7), wherein beyond 6 months, if it is even sent for goods on sale on approval basis, it will be a deemed supply if it is not invoiced within the 6 months. Otherwise, from the hospital perspective, I don't see any issue per se. Only thing is that they'll have to account for it. The property in it has to get transferred to the hospital, and then that will be billed to the patient. One aspect I was just thinking, this section 31 subsection 7, which talks about deemed supply, that is only limited from the supplier perspective. It will not mean a deemed inward supply to the hospital. This was just my thoughts on it. And that limited deeming fiction is only from the outward supply per se is what I of the view. So if you look at this highlighted in those 4 transactions, these are all they are taking in on the approval basis later on based on whatever is used in the surgery or the operation process. It is billed by the supplier to the hospital. The next issue is plastic surgery. Now, if we look at the healthcare services definition, which again is available in 11/2017 and 12/2017, it says any service by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines in India, and includes services by way of transportation of the patient to and from a clinical establishment, but does not include hair transplant or cosmetic or plastic surgery, except when undertaken to restore or to reconstruct anatomy or functions of body affected due to congenital defects, developmental abnormalities, injury, or trauma. Sorry for reading it out as it is. The quick point here is, if the surgery is done to restore or reconstruct and bring it back to the original position, with an attempt to bring it back to the original position, then this would still get covered under healthcare services. But if it is more of a, a beauty service, or where, there is no defect or abnormality per se, but as a requirement to enhance something or change something, if that is undertaken, which is more called as a cosmetic surgery, or the regular plastic surgery, then that would get excluded from the healthcare services. If it is only for restoration purpose or reconstruction to bring it back to the original thing as far as possible, then it would still be covered under healthcare services. So can I move to the next one? So next issue would be outsourced lab services. Now, in terms of handling the volume of transactions or whatsoever reason, the hospital may consider in certain situations where it would have outsourced the lab services to a third party. Now, if we examine this situation, the outward supply is from hospital to patients. Okay, I will cover the second outward supply in a bit. Inward supply is from the lab or the lab owners to the hospital. So as far as outward supply is concerned, it is still part of the healthcare services, and hence it is exempt. But at the same time, we see that a lot of these samples which are collected by the hospital during this, diagnosis and laboratory services which is provided, this is another category of supply which we are discussing now, where the hospital provides these samples to the pharmaceutical companies or other laboratories who do some data analytics based on these samples which is available. And this would definitely be a taxable supply and not an exempt supply, because the service is not healthcare, but it is supply of samples to the party for doing his part of the data analytics. So this is something I thought I will bring about here. Any questions? Please interrupt me. Otherwise,
can you repeat this, the last one once?
Yeah. So let's say, the hospital will have the various blood samples, urine samples, and various other types of samples which it would have collected during providing treatment to the patients or undertaking those diagnostic tests and stuff. So the various pharmaceutical companies, to do their research and development, so they will engage certain labs, or they will engage certain entities, or they will directly buy these samples from the hospital, and the hospital would charge a fees for this. So that would be taxable, because it is a supply towards those pharmaceutical companies by way of supplying samples, and it is not a part of the healthcare services given to the patients.
Got it.
The next issue is corporate tie-ups. We see that in the hospitals, there is this tie-ups which happen with the corporates, wherein regular health checkups for the various employees of the corporates are provided at the specific hospital. The hospital would not charge the employees, or they may give a very subsidized pricing to the employees, for which the corporates would make good with the consideration. So we all understand that for a single supply, consideration can flow from two different recipients, and it could be a bill to ship to model where the entire money is paid by the corporates, and the service is provided to employees. The final nature of supply still being healthcare services, even though money is coming from corporates in terms of subsection 93, the definition of recipient would be still corporates, but still a bill to ship to model can be used, and this transaction would get covered under the healthcare services in my view. Moving on to the next issue, training of nursing students and others. Probably I'll come to this issue when we discuss the educational institution, the medical college related this thing. Now, I have taken up this case study of having a collaboration with another entity, let's say a private limited company. Now, this is a practical case study where I'm distinguishing the different roles, the role of the collaborator and role of the hospital. The collaborator's role is to set up and operate birthing centers, to also set up the procedures, policies, and standards that should operate in these birthing centers. It will also appoint and manage healthcare professionals to operate this setup. But apart from this, it would need a place like hospital for other services, like, it could be diagnostic services, the operation theater, the labor ward, all of these things, the infrastructure, amenities, facilities. And since certain things are permitted only for the clinical establishment, hospital anyways have that registration. So these the role of hospital will run into these activities. It also needs to prioritize the allocation of beds to the collaborators, patients, and all of this stuff. Now, if we examine how the consideration flows in these transactions with respect to hospital services, which hospital directly gives to the patients, the invoice is raised to the patient directly by the hospital and collected by it, kept by it. Now, as far as this collaborator ABC is concerned, because the billing happens in the hospital along with hospital's billing, this collaborator's bill is also raised by the hospital on its behalf, collected by it on its behalf, and then transferred to the collaborator on a periodic basis. Now, for doing all this, there is an understanding between the collaborator and the hospital that a monthly revenue deduction ceiling of 8 lakh rupees is fixed for the hospital. Now, let's say the room rent, because of these, birthing center operation, the patients belonging to this collaborator comes and uses the rooms and pay the room rent for that. If that exceeds 8 lakhs, then whatever excess is there, let's say 10 lakhs is collected, the 2 lakhs plus whatever on behalf collections has been made, that has to be paid by hospital to the ABC entity. Now, if the room rent is less than 8 lakhs, then let's say it is 6 lakhs, or let's say 5 lakhs, it is 5 lakhs. Then from the collections, what happens from that collaborator, let's say for that particular month, 7 lakhs has been collected. 3 lakhs is appropriated towards this balance out of 8 lakhs, what it is fixed. And only the 4 lakhs is transferred to the collaborator. Now, what is this transaction? Like in the consideration, whatever respectively the invoice is given to the patients by the hospital, of course, it is healthcare services and it is exempt. ABC Private Limited, depending on it, whether it is also a clinical establishment or it is not. And based on all of those things, it will invoice to the patient as with or without. Now, between hospital and ABC per se, hospital is providing this infrastructure setup and the connected services and that facility of having its patients being treated over here. So they have entered into an agreement, and there is a consideration fixed of 8 lakh rupees per month, which is more in the nature of support services or O&M, management and operation kind of a setup. So that would be again subject to GST at 18%. So a couple of entries for our evaluation probably. Just. So we have the support services 9985, or if it is in the nature of 9983. These are a couple of entries which we may examine, but it would be subject to GST because the service is provided by the hospital to the collaborator in terms of this facility of infrastructure is provided here. So next we move on to the research division. So in research division, GST, we have to examine whether GST is applicable into the following transactions. 1 second. Paid research services for companies. Now, sometimes the companies will sponsor certain research activities, and it will specify the specific research activities to be undertaken by the hospital within the framework, whatever it specifies, and it is paid by the companies. So if we look at heading 9981, it is taxable at 18%, entry number 19 of 11/2017. However, we have entry number 44 and 48 in 12/2017. One is exemptions pertaining to this incubation, another one is exemptions pertaining to certain biotechnology related research activities. Barring these two exemptions which are there, any other research services for which payment is done by the corporates, that will definitely fall under this entry and taxable at 18%. In certain scenarios, we also might have asked professionals, we would have seen these utilization certificates which are submitted by the hospital to those medical research institutions as a proof that whatever funds have been granted, that has been used for the very same purpose. So this would again, being a funding for a specific activity, it would again get covered under supply, and it would be subject to GST, and we cannot say that it is a transaction in money. The next important aspect to consider here is this intellectual property. Suppose by this research activity, an intellectual property emerges, and if it is commercially monetized, there might be an arrangement wherein a percentage of the commercial proceeds go to the hospital. Now, obviously, in all these arrangements, the person who funds the project would also stipulate that any intellectual property arising out of such research would belong to him. But only probably like can we call it more like a royalty per se? And where do we fit this entry? I was just wondering. 9973 is for the person who transfers this IPR. But here in the hospital per se, it is more a share as far as the commercial proceeds are concerned. I was just struck here to think through what would be an appropriate entry and what exactly is the nature of money received here. Sir, we can't fit in 9973, no, sir, this for the hospital per se. Hello.
Jatin sir is not there. He just dropped out. He sent a message and he dropped out.
Oh, is it? Okay. Huh.
Yeah.
Okay. Others, any thoughts on this?
Yeah, so per se, this doesn't fit into any exemption category.
Correct. Huh.
Yeah. Now, only this is only when it is monetized, the percentage is realized.
Correct.
Is there any taxation element that we are missing? See, there's a time of supply versus value of supply. Now, you do not know the value of supply. Hence, you are taxing it as and when on a receipt basis.
Okay.
Okay.
I mean, so the time of supply itself arises when money is received by the IPR owner. That's the
Do we
arrangement,
say,
isn't it?
that the time of supply is arising if the research is monetizable?
See, firstly, basic arrangement between the hospital and this person funding the research is that you finish this research. The outcome of this research could result in an intellectual property, or it might not result in an intellectual property. It is just a possibility, and if it happens, and further if it is commercially monetized, then it is this thing. So I don't think so. At the initial stage where research is done and completed and handed over, at that time itself, even time of supply won't arise for this, because like you said, the activity itself takes up when he further monetizes it commercially, and then a percentage is shared.
So agreed. My point only here is, isn't it we deferring the time of supply in the absence of valuation?
No, event itself has not occurred, no, sir. Taxable event itself has not occurred, because that taxable event is different. They funded it, we did the research. Now this is after we finish the research, this is a next taxable event which is arising.
Maybe others can view. I'm just thinking on it.
Yeah, maybe we can take views from others also.
See, look at this way. I have given 1 crore to hospital to find one, let's say, one formula.
Vaccine. Whatever.
One vaccine. Okay. Hospital has done all its job, and they gave what of input basis the samples they have collected from the patients and the activities they have done. Over a period of 3 years.
They came out with a vaccine.
Over a period of 3 years, they have undertaken this activity. Now, in the 4th year or 5th year, I am going to the market. Let's say I found one drug house who is willing to buy this, and they are willing to pay me 10 crores. And I agreed with the hospital, whatever the proceeds I will get, I will share 50%. So in year 5, I am paying 5 crores to the hospitals.
See, but that was there was a possibility that he could not have found that vendor who's willing to buy this IPR.
Correct.
So definitely that arrangement would be if the hospital finds it out, and that event itself occurred after 5 years. So there is no preponement of time of supply as this is concerned, because certainty has not come. There is a possibility that might happen or might not happen also.
Okay, so my view here is I would treat this transaction as whatever is the 1 crore that I am receiving towards incurring various costs for doing this research as my supply. And I would offer it to tax from the hospital for 1 crore. And the 5 years later, whatever the 5 crores that is coming, it is appropriation of profits. It's a transaction in money, for which, in my view, there wouldn't be any GST that a hospital has to pay.
That's what, I mean, this has to be checked as case specific as to what were the terms and arrangements with the parties. I did not have any practical case per se.
Generally, the transaction, the arrangement would be the same. So where the hospital would be given a fund so that they can collect the samples, they deploy people, basically at some cost arbitrage, some amount is funded. Rest
correct, but this is more a contingency clause, isn't it? If
absolutely,
it happens,
it is contingent, but no, the funding is absolute. I would view the base fund is always absolute. The base fund of the percentage is contingent.
Yeah. So the base fund is for research, and if it doesn't get covered under 44 or 48, then definitely it is taxable owing to Entry 19.
Exactly.
So once it is taxable, it would be taxable per se for the 1 crore what they initially got.
Correct.
But later on, this additional money which is they are getting is contingent upon they being able to commercially monetize.
Correct.
And a percentage being given. So that taxable event will occur only subsequently, and hence there is no preponement of time of supply required in this regard. And
no, if you are my only
the,
point, Annapurna, here is if you are attributing the percentage of the commercial proceeds received also towards the taxable supply of research and development services, then I am saying that okay, you are deferring it. If you
so
are
you're telling that even that is 9981 and not 9973 or anything else. Okay.
Correct.
Okay, that is also 9981, but it occurred upon contingency. So can we say time of supply to that extent is the payment received?
Correct. So that is something which is deferred. Owing to valuation, we are deferring. I don't
not
think
only valuation. I am not even sure whether it will happen
absolutely.
At all. If
so
it
was
only
agreed.
Valuation, then I agree. With interest, it might have been applicable.
So what I am trying to say is that is not at all taxable, is what my view is.
How, sir?
It is
under which entry do we give it as an exemption?
The person who is selling the research activity, he is the one who is liable to pay tax, and he is only appropriating the profits and proceeds to me.
So okay, where is it exempt? Like we don't have like 10(2)(a) income tax where share from partnership firm is exempt. In GST, if we cannot find any HSN, we have this subsidiary entry of 9997.
I'm saying it is not supply. It is transaction in money. It is share of profit. Same like a dividend. We entered into a JV, you pay it.
So first, the IPR is created in whose name? Is it funding or investment?
IPR is always sponsor's name.
IPR in the name of sponsor. Then it is not funding, it is like investment.
So now we are only looking at the taxability in the hands of the hospital, because the sponsor, when he is commercially exploiting, he will definitely pay GST on that supply.
See, it is not an agreement directly between the third party and I don't think it is going to be a tripartite agreement. It is an agreement between this hospital and that entity who owns IPR now. The third party who is actually making the payment to the entity who in turn is making payment, all three are not part of the same contract, isn't it? To call it as an appropriation.
I don't know, others can give their views.
Venu sir.
Yes, Kuber sir.
First point that when 1 crore is received by this hospital, it is taxable, it is completely, I agree. But when we look at the agreement itself says that, okay, company will fund this hospital initially for about 1 crore.
Right.
And they will agree with the term saying that there will be some formula that will be kind of like research. And that formula will be transferred or may not be transferred to the company. And subsequently, if there is a monetization that happens, a percentage has been agreed to be shared.
Correct.
So when IPR is getting transferred, the moment that formula is getting developed, as and when the formula is getting developed, the title vests with the company is what we can say looking at the agreement.
Correct.
But if you go back to the principal agreement, as we were discussing that this is a principal to principal basis, the hospital clearly knows at the time of undertaking this research that it will receive 1 crore, which will be a cost to run through this research.
Correct.
And it is also aware that the agreement is also clear that there can be a further consideration for undertaking this research if the solution or formula what they are developing has the marketability subsequent.
Correct. Absolutely.
So I think the supply here is doing this research for a consideration which is known for about 1 crore, for a part of a consideration which is yet to be ascertained subsequently, depending on the market conditions and depending on the person or pharmacy company, which may come up later to purchase this. So I think in both the cases, it is 9981 taxable at 18%.
Yeah.
So when you are taxing this balance 4 crores in the year 5,
yeah,
what is the time of supply for it? The time of
time
receipt of that?
Time of supply, see, supply gets fluctuated only when we find that third person. Only when we find that third person, for which they will have a separate agreement, and the terms and conditions will be decided. They may have a fixed consideration, they may have a variable consideration, they may have a consideration depending on the market demand. All these things may come up later. For all that, we don't know the consideration what will be there after we chose to transfer it to a pharmacy company. So I'm saying the supply to the extent to supply. When we look at the hospital, it is interesting. When we look at the hospital, there is only one supply to that company which is funding. Now a portion of it is a portion of that consideration we are aware, which is 1 crore, which we will be receiving it in advance. But the balance, we don't know what is the consideration. So against a single supply, we have one fixed consideration, one variable consideration. Variable consideration will be known at a later point in time, maybe after 5 years. That I think because of valuation, absence of valuation, we can tax it in the month in which we receive that consideration.
And also, maybe we can look at it from this perspective. It is an additional consideration received for a past service.
Exactly.
Which gets crystallized only subsequently. So like you said, like, one of the ingredients is not yet come to the, it is not yet crystallized or kind of it. That is why we postpone it till the time it is certainly known.
So another alternative thought question is, if the pharma company pays the sponsorer 50% and pays the hospital 50%, vis-a-vis pharma company is paying to the sponsorer and the sponsorer is sharing the proceeds to the hospital. Will there be any difference in the taxation?
It's a tripartite or principal to principal.
Correct.
Yeah. So there is like if the
implication change
versus if it is a principal to principal.
Yeah, the implication changes.
See,
and for all that, why this company?
Sorry.
Yeah,
please.
Yeah, and for all that, why this company needs this sponsor when it is only funding? It can directly fund to hospital, no? So we need to see what are the obligations of this middleman in between.
No. So the middleman is the one who is willing to take that risk, and he will be trading with different pharma companies who can give the better price and everything.
Okay, if that is the case, that's what tripartite. We have different obligations.
Probably he even has an idea as to what research needs to be done.
Right now, if I don't know the pharma company, definitely it is only the sponsorer and the hospital. Correct. Now I am talking about 5 years later, where the sponsorer is going to the pharma company and saying that, hey, look, out of 10 crores, pay 5 crores to hospital and give 5 crores to me. He is billing entire 10 crores to the pharma company and asking the hospital to bill him for the 5 crores to pay the balance. Will there be any change in the position in the hands of the hospital?
In my view, there will be, these kind of arrangements will have an impact on identifying the appropriate HSN. But in my view, the proceeds received in whichever format, in whichever arrangement, in whichever manner they agree is taxable, both in the hands of sponsorer and also in the hands of hospital.
See, if it is a tripartite agreement, it means that probably the intellectual property is jointly owned by the person doing research and person sponsoring the research. In such a case, if it is a joint owning of the intellectual property, then 9973 might trigger, and at once where the whole transaction will suffer GST once. But if it is principal to principal basis, first on the whole amount, what the sponsorer receives from that pharma company, and again, in turn, from the hospital, which part of it is received by the hospital under 9981. So for that middleman, it is 9973. Hospital, it is 9981. But if it is a tripartite where intellectual property is jointly owned, entire thing is 9973 proportionately. Can't we look at it from this perspective? Provided again terms and conditions of the arrangement.
Got it.
So shall I move on to the next issue? Anybody wants to add anything over here?
We can move on.
Yeah, okay. So now coming to this issues in the medical college. So it undertakes approved educational courses. It has to be qualification recognized by law in order to get covered under entry 66 A of 12/2017, where educational institution definition is also given in that notification, which states that which conducts any program which is a qualification recognized by law. Again, approved vocational educational courses are also covered in that ambit, but non-approved vocational courses are not covered. Coming to this online ebooks subscription used by the students, doctors, and researchers, for non-approved educational course, it is exempt and taxable for approved. Interestingly, entry 66B has an exemption to the inward supply part, which is there. And for this online ebook subscription, it is exempt for non-approved educational course and taxable for approved. So if we are looking from the RCM perspective for the medical college, so if it is for a non-approved, then no RCM. If it is for a approved, then it is taxable. Now, housekeeping and security services to medical college. If it, I mean, it is if it is in such educational institution, then it is obviously this we can cover it and exemption would be available. I'll just touch upon issue number 11 as well. Training of nursing students and others. Again, we have the definition of approved vocational education course in 12/2017 as to these specific recognized courses by National Council for Vocational Training and also the modular employable skill course. So if the courses which are approved and covered under these things, then it will get covered under Education Services 9992 and exemption is available. Otherwise also same HSN, but it would be taxable because of the entry in 11/2017. Yeah, so the last issue what we consider here is the call center activity as part of the CSR initiative. Here, the hospital will assist the callers with mental depression and suicidal tendencies. It is trained, they employ trained people who are supervised by human psychologists. It is funded by CSR initiatives of the various corporates. Now, basically, again, this can we take it under a bill to ship to model? The trained employees supervised by human psychologists, it could be, can we call them like the kind of paramedics? I don't think they would fall under there. It is only the, again, specifics has to be looked into. What is the expected qualification of those employees? Is there any specific requirement per se? Or would it be sufficient that, since it is supervised by human psychologists, and these employees are only working under them, it would still be qualifying under the healthcare services per se. Again, the CSR Act funds are received with the specific instruction to conduct this very activity for the hospital. So, since it is more like a mandate for the company to take up the CSR initiative, and they have chosen to engage the hospital in conduct of this activity, can we really call this as an healthcare services? Maybe we can just look into.
Yeah, I think that is an healthcare service. because the clinical establishment is supplying that service. So therefore, it is exempt in my view. It can be
So
considered
abnormality, yeah. So we can do it as a bill to ship to model, and it might fall under this abnormality. And
Can we not
probably,
say health includes the physical and mental health?
yeah.
And when the doctors give counseling, like, they are called as psychologists, do they also come under healthcare, or psychiatrist comes under healthcare?
Human psychologists. See, I mean, this authorized medical practitioner is different. This
But this is
paramedic
given
staff,
by the clinical establishment, no?
yeah.
But that psychologist whom I am referring to, they do not come under any clinical establishment. They do some course. Of course, what they do is also comes under mental health. But does it fall under paramedical, or just like how we do for physiotherapy? Does it fall under that? Or is it more like a counseling?
I have not looked at it from this perspective. Maybe I'll consider this. I'll look into this and then come back on this point. So I think that ends the various issues which we had thought for considering. Any questions? I would be happy to take up. Any questions in the chat box?
No, there are no questions.
Yes.
Annapurna madam.
Yes, sir. Yes, sir.
Can you go back to 3-4 slides? That there was an example, 8 lakhs example.
Correct.
Yeah. Can we discuss about the billing, the pattern of billing in this particular case study? Yeah.
See, what happens is, let's say, the whole billing system, everything will be in the hospital, right? So the patient, when they come, they, as far as this birthing center related services is concerned, they will take it from the respective birthing center, okay, which is also again part of the hospital only. The entire setting up, operating, everything will be taken care by the collaborator. But let's say, so let's invoicing. Let's say hospital has rendered like room rent and other healthcare services like minor diagnostics or some blood test and all that. So for that, hospital will bill directly to the patient. And for this birthing center services, the ABC will invoice to the patient. Probably they'll have their own staff who are, raising invoices. But payments are collected by hospital on behalf of ABC. Like, let's say this is, a hospital is charging 25,000 and ABC is charging, let's say, 20,000. The entire 40,000 is collected by hospital, but there is this separate invoices. It is basically an on behalf payment.
Okay.
The reason is why hospital collects is because it wants its 8 lakh to be sure, which is a fixed ceiling. Any excess will be arrived at month end and paid off to ABC.
But hospital has to raise invoice for 8 lakhs again.
Yeah, correct. Hospital will raise invoice. Hospital to ABC, it is 8 lakhs every month invoice.
Every month, correct. Okay.
Correct. That is maybe under support services we can take 9985 or maybe 9983. Either of the entries we can take it and
yeah, classification again depends on agreement.
Yeah.
Okay, thank you.
Collaborator get covered under clinical establishment. In the billing of the collaborator, will GST be charged?
See, there is a possibility that he might also have obtained a clinical establishment, but operating efficiency, saving on infrastructure cost, he might have collaborated with the hospital. Otherwise, if he has not obtained, then again the GST will be suffered by him because he will not fit into that 74 exemption entry. Two possibilities. If he is a clinical establishment, then a different scenario. If it is not, a different scenario.
So when it is a clinical establishment, it can also be treated as if a hospital is using an ICU of another hospital on a sharing basis whenever it is needed. So both would be under exempted category. Any other question by anyone?
Something in the chat box.
No,
When
no.
you apply
That's taxable.
Annapurna, one more issue here.
Yeah.
See, in this hair transplant, we have one exemption saying that hair transplant. So one of the hospital, what they do is they do the basic testing actually. Before doing that hair transplant, they will do blood test and other tests. And only if you are able to fulfill all those criteria, then they will do that hair transplant. So whatever the initial testing they are doing, can I just take it as an exemption? Or will I still fit into the entry of hair transplant? Because that pre-testing, we are doing it with the objective of hair transplant, right? So the issue is...
But I mean, ultimately, whether hair transplant will happen or not, we don't know.
Correct.
It is only the initial procedures which are done, which would fall under healthcare.
Yeah, that is what even we are trying to argue, but the basically department is trying to argue that as there is no exemption for hair transplant, and this testings is inbuilt only for the reason of hair transplant. So,
so you say that there is no exemption. What is the reason? Because of this definition, is it?
Yeah, because of this definition.
Now, again, this hair transplant, let's say somebody has become bald. To restore that baldness, hair transplant is done. That's a different thing. But somebody having a hair length of, let's say, 10 inches, they want to make it 18 inches.
Then that is a cosmetic. That will
then
come.
That is a cosmetic, yeah.
Cosmetic. That is okay. That coloring, that is different. This basically purely on this hair transplant because they do lot of
correct suitability test, blood test,
testings and all will be done if that body suits or not, chemicals and all.
Correct.
So that was one more aspect I thought I'll bring it here actually. And one more, this Sujata, which she was raising on that mental health also. I think that is also a part of this. Now, only counselors who are private counselors are not covered. Otherwise, I think NIMHANS and all today, they are falling into this clinical establishment.
Correct. Once they have a registration under the Clinical Establishment Act, and then they provide these services, employing the potential or skilled employees for the same. I think we can by and large say that also all the consideration is coming from another person. It's a bill to ship to transaction, we can say, and get covered under the healthcare services.
Okay.
So any other questions?
Yeah, I think we have answered all.
We can answer all the issues to these questions and circulate it. It will be of great help.
Yeah, I will share this into the drive again under 114. Yeah. Okay. And the video recordings are getting uploaded to the YouTube. Up to the 100th session, it is in that website. Rest after that, I am doing the YouTube. Yeah.
Thank you so much.
Thank you so much, Vanessa.
Thank you. Thank you, everyone.
Thank you.
Bye.
Thank you all. Thank you.
Thank you.